Hey guys, per usual, everything on this channel is for educational purposes only and is not intended as financial advice. So a lot of people are asking me about Ethereum. Figured I'd do a video. Bitcoin's on a tear and a half. I'm not going to talk about Bitcoin in this video, but stay tuned for the next video. Market cap of Ethereum currently sitting at 24 billion, should you believe the Brave New Coin numbers. This is not coin market cap, this is Brave New Coin. Up a juicy 13.18% today. So in my mind, Ethereum in general, going forward in the next few months, is going to be very bullish, I think. I'm traditionally an Ethereum hater, so let's run through some things on why I think Ethereum's going to double or more. I like 500 as a target, nice psychological level, but let's take a look at the evidence for that. So first, some fundamental things. Vitalik is Russian. He met with Putin. They're going to do some things with Ethereum, most likely, them being Russians, them being banks, whatever. You can read this article. I'll leave all the links in the notes below. But basically this article is saying that Russian banks are super bullish on cryptocurrencies, most likely Ethereum because of Vitalik, so they lucked out with that. There is a Ethereum hard fork Metropolis coming in 1 or 2 hard forks probably this year. It's hard for me to really say. I don't really know much about it. It's hard to find information about dates. I don't think Vitalik has really released any dates per se. If you want to read up about it, I thought this was a pretty good article, kind of breaking down the EIPs, the BIP equivalent, listing the things, the changes that are expected, and this person's opinion, how the status of those things are. Again, you don't need to read this person's opinion as gospel, but it may help you figure out what these things mean, are, or do. And then really the big fundamental reason why it's impossible to ignore something like Ethereum is the ICO bubble, which has not really been changed at all with the SEC regulations. Speaking with a lot of folks who are raising ICOs or doing ICOs, they seem unfazed, almost naive. I think until we see people in handcuffs, it's just going to keep going on as is, status quo, unchanged. So this is 2016. You can see there was 64 ICOs, total amount raised at 103 million on the year. Now we're hitting 103, obviously, on some of these ICOs or more. Bancor, I think, was 300 million. And then if we look at just ICO investment versus VC investment this year, again, this just tells me things are insane. Generally, VC investment to me, venture capital, meaning risky but smart people who are investing, whereas ICO is anybody. So that is a bit worrisome. Again, bubble type numbers here going into June of this year. This is part of the supply-demand thing with the tokens quote-unquote being locked up or not. They aren't really, I don't really understand that fully, but that's not the point of this graph. This is just showing the percentage of the ICOs, the percentage of distribution requiring Ethereum. So you can't buy into an ICO unless you buy Ethereum. So there's your supply-demand shift right there. And then lastly, to further drive this point home, this was the best graph I've seen so far, showing number of ICOs and token sales in 2017, almost 300, with several of those still pending, upcoming. Obviously some of these have completed, some of the bigger ones we've heard about. Most of the smaller ones no one's heard about. Unless you're reading up on 5 ICOs a day, you really aren't getting in on a lot of these, at least from my perspective. Okay, so that's the fundamentals, stuff I don't like to talk about, but a lot of people like to hear about it. So agree or disagree with me on any of that, that's fine. Now we're going to talk about technicals. So a lot of people are asking me, should I buy here? Should I put bids here? This is not trading advice, this is educational information. If I'm, parsing out my decision tree of trading and I'm trying to figure out what I should be doing when and where and why, I go to a few things immediately. Pitchfork number 1, which is right here, and the 200 EMA is number 2, and the big one for me obviously is Ichimoku Cloud. We'll talk about that. So just looking at this, you can look on this at any time frame. This is a 4 hour, this is Brave New Coin's Ethereum index, this is ETH USD. Just looking at this, the big thing with the pitchfork, if you've never seen or heard it, is the trend, essentially, the projection of the trend. The zones on the bottom are the buy zones, zones on the top are the sell zones, and this median line here is a high probability touch zone. So just right there you can see where I get my 500-ish number from. It's also basically back to all-time high levels based on ETH USD. So that's no surprise. I think that's where we're headed. Important here is that we're bouncing on the bottom zone, the oversold zone, if you will, and we're bouncing up from that currently. It's just something to keep in mind going forward. I don't think we'll hit 500 in this month, probably not till September or later. Now moving to the 200 and the cloud. This is the doubled cloud. I'll show the singled cloud as well. I just have a special place in my heart for the doubled cloud. So you can see, again, if you don't understand cloud, that's fine. All this is about is price above or below cloud. It's currently in the cloud. That's a no trade zone traditionally on higher time frames. Okay, so that's one strike against being in this. But it is above the 200. This is the red line here. And for many, many people in many, many places, being above or below the 200-day moving average is bullish or bearish. So if it's above, it's bullish. If it's below, it's bearish. If it's bouncing and showing support like it did here, that to me says it's highly bullish. Continuation very probable. Cloud signals are mixed. Cloud is bullish. TK is not bullish. GQ lagging spans in pricing cloud. So that's on this time frame, which I don't think is the best anyway. I think Ethereum really likes 4 hour, at least in my mind. Yeah, this captures the trend on the cloud, but just for me personally, I like the 4 hour. And you can see it's reaching this Kijun equilibrium point. Price will continually try to reach back to it, whether it's above or below. You can see it fell below and it reached back not once but twice here. That's doubled. And again, your tree, your decision tree, it's above the 200. I shouldn't be selling, I should be buying. So your single cloud, super nuanced, but you can see it flipped bearish, the cloud, and it's slowly approaching the Kumo twist here, which I haven't done a solo video on, but essentially the Kumo twist is a place where support and resistance is essentially zero. It's a special time point where, should momentum exist, a thrust of the price through that zone is highly likely. And you can see we're getting something sort of in the works cooking here. So I fully expect this to shoot through this Kumo twist, no doubt about it. You can see the TK cross is bullish here as opposed to the doubled cloud. That's really all I have to say about the daily. Again, if you used doubled or singled, single has been backtested, singled being 10, 30, 60, 30, to be better overall for entries. I just like doubled better in general. So if we look to daily B bands, you can see we're getting a daily B band breakout. Okay, again, decision tree, buying or selling here. You tell me. 4 hour bands, walking up the bands, that's what this is referred to as. Again, walking up the bands. Very bullish. Walking down the bands would be extremely bearish, like it was here. So this is extremely bullish, especially with all these candles that are green over and over again. So here's the 5200 on the 4 hour. You can see it captured this whole trend quite nicely. Overall, it was kind of slow on the 4 hour, surprisingly. So it allowed you to get in basically at the bottom and get out almost near the top. It's not perfect, but you can use stops for that. So the point is, right now you're getting the recross here, just as you did here, calling for an entry signal. And if we zoom in on that, you can see 200 was resistance over and over and over again, and it sort of squirreled around, and now it's clearly a spring, and it's going to go. So possible EMA strategy you can use is get ready, get set, go. So get ready is breaking the 200, get set is the cross on the 200, and go would be a throwback to the 200. So whether or not we'll see a throwback down to 220-ish, 230, I don't know. But bids there at this point, for me anyway, are viable. Moving to the 4 hour cloud, doubled. All the signals are green, go, bullish, punch it, let's do it. Cloud's bullish, TK has been bullish for a while, lagging span. You can see how it's clearly above everything. It was above everything back here. So this, as messy as this looked, even at resistance of this ascending triangle, definitely an entry point. What I did is I filled up a little bit here, and then I just held and filled up a little bit down here. So I've been in even before the cloud told me to get in. Here's another part, again, possibly nuanced, but when you're looking at entering in a trend, previously a bearish trend pulling into a bullish trend, you want to make sure that the bearish trend is over, One way to do that, again, look at the cloud. The cloud tells you that on the 4 hour. Here's the pitchfork. The down pitchfork on the 4 hour. You always want to make sure you use an extreme high or low, and then a swing high, swing low, swing low, swing high. But all the points need to be anchored. You can't just put it anywhere. If you put the channel anywhere, it's just a channel. It's not a pitchfork, which is fine, but don't call it a pitchfork. And whether or not you put on all the bells and whistles, that's up to you. I just put it on because it looked nice. But the point is, you can clearly see we've violated the diagonal here of the pitchfork, and it's going. There's almost, you know, an A, B, C, D sort of thing happening right now. And lastly, if we move to chart patterns and projections, just in the interim, I was just posting this Adam and Eve. So you call it Adam and Eve because you get one thrust down that's abrupt, quick, stabby looking, and then an Eve which is gentle and slow and roundish, okay? In general, all these patterns, forever and always, should always have a descending volume profile. That is not necessarily the case here, although basically when the Eve was being formed, since then it's been descending. You can see it's yet to break out on volume, depending on where you draw the resistance. If you use a horizontal line, if you use a zone, if you're super non-conservative with resistance, as I was here, and you measure it like this, you get a target of around 400. If you are more conservative, you get a measured move of around 336, and all you do for these measured moves is you measure the extreme bottom to the neckline or the horizontal resistance, and then project that up. So again, least conservative was 400, most conservative is 330 basically. And you can see the fib, if you fib from a conservative zone of 230 to 134, which was essentially what I think of as the horizontal resistance, you get a 2618 of 386, so that's on point for 400, and that was essentially the previous all-time high. So none of this is super rocket science, okay? We'll probably get a pit stop around 290 just based on that fib extension. But that again is a horizontal zone you can see here and here. So really this chart isn't too complex in my mind. If you're just looking at horizontal levels, you know, you don't need to go through all those other things that I did to determine this information. We're probably going back up to all-time high. From there, it'll be interesting to see. We may get a cup and handle on a higher time frame. So we're building the cup right now. A handle would probably bring us down to 300. I'd have to fib out whatever the 50% of this from here to here is. That's the handle target, and then the projection upward from there. I'll make that chart real quick. So here's that cup and handle chart. Again, you're measuring the cup from the high to low, and you're fibbing that out high to low. Basically, the cup is saying, well, go back up to 420, blaze it, and then pull back to around 277-ish. As long as it's above the 50%, it's still valid. So it could stop at any one of these points, and then sort of go up beyond 600 from there. Again, this isn't like a near-term thing. This is like probably months away at this point, but certainly something to watch. And this is super early. This can be violated easily at this point, but it's certainly on the radar for me, just based on the current structure. And lastly, just because someone's going to ask me, what do I think about the ratio? Basically all the same stuff I just talked about, except using different numbers. So between 055, 070, I think is good support as far as bids are concerned. Again, it's above the 200, so it's in bullish territory. If you're talking about this bid zone, you know, previous resistance turned support. Again, not exactly rocket science, but that's a good zone to watch, and it lines up with the 200 nicely. And if you're being super conservative, you're waiting for the doubled cloud to be signals to be bullish. So past 0.11 is what you're waiting for. But price is looking to pull up to 0.11 again based on the Kijun. Price is always looking to touch the Kijun over and over again. You can see it did that here. That's where it's headed. Alright, so that's all I have for today on Ethereum. Like, dislike, comment, share, subscribe. Hit me up on Twitter, Telegram, donate, and happy trading.